So guys, what's going on with real estate right now? And why is it happening? And what's gonna happen over the next year, 2 years, 5 years? Food for thought. Home prices doubled in the 1970s. We're gonna talk about that again in a minute, but they doubled in the 1970s. Income went up too. In the 1970s, income went up 13%. Okay, so 13%, if you were making 10 bucks an hour, that's $1.30 an hour raise. People weren't making 10 bucks an hour then, it was a lot lower, but it still went up 13%. Housing prices doubled in the 70s. They weren't like they are now, but they still doubled. Vietnam War. Let's talk about war. 1964 to 1975. Global War on Terror. 2001 to present. And you could argue those dates, but it's not like this, it's not the same, right? This isn't the 1970s. This is not the Vietnam War. But there's some shit going on right now. What's that going to do to home prices? Well, home prices with an epidemic, with COVID, right? Housing prices went from about $221,000. That's the average house in the United States, not Rochester. The average house in the United States in 2010 was $221,800. In 2020, that average sale price was $391,000. So it went from a huge number, $221,000, and it almost doubled between then and now. And then it went up a significant amount to 2021. Now, 2017 to 2020 is something everybody's talking about now, because 2017 to 2020 is the last time interest rates were really about like they are now, right? So like 2019, interest rates were 3.94%. 2016, they were at 3.65%. 2021, they cratered at 2.65%. And everybody and their brother went out and refinanced their home. That's important because right about here, everybody welded themselves into their home. If prices are going to come down and you refinanced your home for as much money as you could refinance it for, you are welded in. You are not selling if prices come down. But will prices come down? Well, it's interesting because they haven't ever, right? 1970, the average home sale price was $17,000. In 1980, that went up to $47,200. Now look, interest rates in 1975 were 9% in 75. 79, they were 11.2%. Between 1979 and 1981, they went from 11.2 to 16.8%. How high does 5% sound now? It's not. Now, in 1990, which is what a lot of people are baselining this market on too, your average sale price was $79,100. Interest rates in the 90s, I didn't pull, crap, we'll pull it later. But in 2008, when the market crashed again, the real estate market did crash here. Interest rates were at 6%. So do interest rates being at 6%, do they cause a market crash? No, they don't. What is housing demand? Why do people need houses? Housing demand is simply people. And if more people need a place to live, housing demand goes up. If less people need a place to live, housing demand goes down. Do you know anyone that doesn't need a place to live? Because I don't. So everyone needs a home. Housing demand is directly related to population, which over these years has also drastically gone up. Population goes up with a thing called compounding interest. Compounding interest is easily explained right here. If we were to go bet 10 cents a hole on golf, for 18 holes, it'd be $1.80, right? Because I'm good at math. 10 cents times 18, $1.80. What if we doubled it after every hole? So 10 cents goes to 20 cents, so 20 goes to 40, 40 goes to 80. If you do that, do the math. On the 9th hole, you're at $25.80. Where do you think we are on the 18th hole? You started with a 10-cent bet. You double it after every hole. 9th hole, you're at $25.80. 18th hole, where do you think? Do the math, $13,107 off a 10-cent bet. So compounding interest is how people reproduce. And we love reproducing. People love doing that. We do it like it's our job. So populations constantly go up. Now, we took a whole generation somewhere in here, and we taught them that jobs that could potentially raise housing supply are demeaning. They're not for you. You should go to liberal arts school and go into student loan debt. That's what we did right here, right? So we have less tradesmen than we've ever had. We have a higher cost of supplies to build with than we've ever had. We have a supply shortage of tradesmen. There are not enough tradesmen. So what happens to the price of skilled trades? When there's not enough skilled tradesmen and there's an abundant supply of work for them, do they charge more or less? They charge more. So we've got prices to add to housing supply going up. Housing prices themselves are going up. Interest rates are now going up. Is housing going to go down? I don't think so. I don't think housing prices are going to go down. What I think is going to happen, truthfully, is that instead of seeing 30, 40% gains like we did from 2017 to 2022, instead you're going to see it flatten out. And it's going to get more expensive for buyers to buy the same house because interest rates are going to keep going up. Now, if you have a house to sell, what should you do? Well, if you know prices are going to flatten out, at best, flatten out. At worst, they could go down a little bit. We don't really know how the war in Ukraine is going to affect housing prices. We don't know what the government is going to do to compensate for what we're seeing, because they're not going to just watch it happen. The government is going to do something. They're going to get involved somehow, whether it be to incentivize mortgage rates again, bring them down like they did in 2020, 2021. They might. They might put more money into the economy somehow. These are all things you got to be watching. If you're trying to predict the future, you got to look at all of the factors, and there's a lot of them. So guys, if you're thinking of selling a home in the next year, do you want to sell it now or later? Now, because there's a lot of uncertainty ahead. And look, you could get lucky, but if you know you have to sell in the next year, my advice to you is to call today and get your house on the market before the supply spike that happens in the spring, because everyone does what they feel they should do, and they feel that spring in Rochester is the best time to list their house because it looks the prettiest and the flowers are out and everything looks good, but right now it looks, nasty out. And your house may not look as good right now, but there's going to be less houses for your buyer to choose from now than there will be in spring. There will be more for the buyers to choose from. And those little daily market updates are what you got to pay attention to if you're going to be doing business in the next year or two, because you got to be current. So get in touch. If you're thinking of selling, we'll talk. Guys, have an awesome day.